Morning, and let's walk you through the top 5 stocks to watch out for in trade today. Well, it's all about numbers and all about earnings. So let's begin then with PSU Bank of Baroda, that delivered its earnings. The company put out a mammoth loss of 1,046 crore rupees versus a profit of 507 crores, and you had the provisions as well elevated in the quarter gone by on a sequential basis. So 3,586 crore rupee provisions. This is versus 3,435 crore rupee provisions on a QOQ basis, versus on a year-on-year basis it was 6,645 crore rupees last year. The NII came in at 7,106 crore rupees versus 6,798 crores. The provision cover for BOB stood at 81.8% versus 81.3%, including the floating provisions. Moving on then to DIVIS Laboratories, and nothing short of a dhamaka set of numbers. The company delivered a profit that was higher by 29% to come in at 502 crore rupees versus 388 crores. The top line growth is well steady at 1788 crore rupees, up 29%. Margins expanded to a healthy 39.9% versus 27.9%, and EBITDA was strong, 84% higher on a year-on-year basis to come in at 712 crores versus 387 crore rupees. In fact, brokerages as well are hailing this one as a strong buy. Motilal Oswal has maintained its buy rating with a target price at 48.50 on Divis, saying that there are multiple levers across custom synthesis, API, nutraceutical space. They believe that the better sales growth and superior product mix has led to strong earnings, and they've raised their FY22 to 23 EPS estimates by 4%, saying they expect a 32% earnings CAGR over FY21 to 23. Indian Bank NII growth came in at 3,328 crores versus 2,000 crores. Asset quality somewhat deteriorated to 3.37% for the net NPAs versus 2.35%, but the company delivered a profit this quarter of 1,725 crores versus a loss of 267 crore rupees. So that was encouraging. Watch out for Indian Bank. Keep Tata Steel on your radar. Morgan Stanley has maintained an overweight with a 1630 rupee target price. They believe the share price will rise relative to the country index over the next 60 days and say that the stock has traded off recently, making the short-term valuation compelling. Remember, Tata Steel has corrected 11% from the peak that it hit on the 11th of May. They believe that domestic flat steel prices are at around a 15% discount to the import parity, and Tata Steel is well placed in the upcycle. Nazara Tech came out with its numbers, a PAT of 4.2 crores versus a loss of 7 crore rupees. Revenues at 123 crores grew from last year's 87 crores, and margins stellar at 7.6% versus 0.6%. So watch out for all these stocks.